Good afternoon. Today is Tuesday, August the 8th. The time right now is 2 minutes to 1 o'clock in the afternoon. Overnight, we can see that US equity market continues to rebound from last Friday low of 35,118 in the Dow Jones itself. Now, obviously, this is the micro E-mini Dow futures, and using this as a reference, you can see the price has been quite elevated since last night rally, but this is basically getting ahead of itself because we have a all important CPI numbers that will be released on Thursday, and we do expect the numbers to actually deteriorate, showing a possible resurgence in the inflation situation in the States. Now, this is something that you have to worry about. On top of now, this is despite the Fitch credit agency downgrade of US credit rating from AAA to AA plus. Now, this is definitely going against the grain, and definitely we have not felt the full impact of this downgrade. I suppose going into the following weeks, that will be most telling as to whether this will be a factor to consider as we see the rotation out of equity into possibly the bond market, because the US Treasury are going to issue a wall of new issues in treasuries, and for that to be actually be taken up by the public, they need to offer a lot more higher yield than what is currently being offered. So that means there's going to be a rush into bond market at the expense of equity market. So let's watch what happens when they finally issue all these treasuries to the marketplace itself. In the S&P 500, we can see that the price has also rebounded, but not by the same degree as we saw in the Dow itself. Lately, we have seen that over the last few days especially, we can see that the Dow has been leading the market on the upside, whereas the Nasdaq has been taking the market on the way down. So we can see that there is a bit of a divergence between what we saw at the beginning of the year until basically July, where the Nasdaq has been taking the market higher while the Dow Jones has been lagging behind. So right now we see there's a shift in role between the Dow Jones and the S&P and the Nasdaq itself. So definitely we are seeing more of that going forward. In the micro E-mini S&P 500, you can see that the low was 4,491 and a quarter. So last night we have a somewhat of a bounce back to 4,541 and three quarter, and I think this market is getting ready to actually roll over to the downside. I'm actually targeting 4,411 for the next move. Okay, in the Nasdaq, earlier on I did mention since the rally all the way to 16,000, we can see that there is a little bit of a change in the structure of the bounce in US equity markets, and I noticed that the Dow has been taking the market a lot firmer, whereas the Nasdaq did not quite follow through. Same thing like last night. The Nasdaq only rose by 0.6%, whereas the Dow itself has actually done a lot more than 1%. So we can see that the bounce in equity market has been a little bit more prominent in the Dow rather than the Nasdaq 100. Could this be telling us that there is going to be a exit from tech stocks? So we have to watch this move as it happens. In the micro E-mini Nasdaq 100, we can see the top is 16,062 and a half, and the low traded last night was 15,334.5 before we see the bounce here. So would this be enough? Because so far the market has pulled back in a very neat three-wave decline, suggesting that this is nothing more than a correction. But however, because the other index itself are showing symptoms that it may actually offers a little bit lower in the weeks ahead. So maybe I'm also of the opinion that over time, the Nasdaq may actually roll over to target something like 15,000 over time. So this is still my outlook for the time being. In Asia, we can see that this morning we have the release of China import-export number. It was horrible. Further evident that the Chinese economy is slipping towards a deflation. Both export number has declined more than expected, but the worst one is actually the import numbers that has more than doubled. Okay, in terms of its weakness. So this is something to worry about, and this is the reason why the Hang Seng Index has actually come off this morning to 19,136 in the futures contract. So based on this trajectory, I've always maintained the market does look a little bit weak, possibly targeting somewhere around the 18,800 levels to possibly as low as 18,600. So this is still my outlook for the time being. Over in the Shanghai Composite Index, we can see that this morning the market has held up pretty well, considering the number that came out this morning was pretty bad. So for now, the market has been holding in a sideways pattern. Basically, as far as you can see, this pivot point here at 3,248 seems to be holding the line for now. Let's see over time this how it will perform. So I have no particular view on the Shanghai Composite Index because it does look like it has done a three-wave corrective rebound, and now it is possibly evolving into a new structure for us. So we will have to wait for the market to tell us what it wants to do. Over the Nikkei itself, we can see that prices has actually attempted to rally, but it did not quite get into the bracket of prices, which I think is ideal for selling. That level is 32,570 to 32,780. The high traded this morning was 32,530 in the futures contract. But by and large, I do expect prices to actually roll over below the 31,760 that we saw in the middle of July, and my targets for the time being remains at 31,240 to as low as 30,700. Okay, and in the dollar itself, we can see dollar has been rebounding last night, and this is causing a little bit of a sea change here. So what happens is that the market actually have bottomed out in the futures contract in the dollar index at 99.22 all the way to 102.65, and this pullback, except for this big drop over here from 102.33 all the way to 101.55, that drop here is quite significant because it suggests that possibly we will be looking at much lower prices going forward. For the time being, my target is 101 in the futures contract. So the market right now is within this bracket of prices that may make or break this structure here. The bracket is 102.11 to 102.24, and if the market unravel downwards below 101.55, then it's heading towards 101 in the futures contract before the market see a more significant rally beyond 102.65, even beyond 103.27. So this is definitely a technical pullback waiting for the market to actually target the 101 level. I'm still a little bit bullish in the dollar because the dollar has been falling for quite some time, but we can see that since the middle of July, we can see the dollar has actually possibly have hit a bottom and is possibly gunning a little bit higher for now. Okay, and in the euro dollar, you can see that the US dollar actually has come off a little bit from last night's from last Friday high at 110.40, and this morning it actually, or rather last night, it went down to as low as 109.65 within the bracket, which I think is ideal for buy because I think this is a technical rebound. The market is possibly targeting 110.90 to 111.40 before the market unravel to the downside. So I'm actually quite this will be in line with my dollar strength scenario going forward over the medium term. Now sterling has actually rebounded a little bit more than the euro dollar. So the low at 126.20 looks like it's probably a low for now. I think the market may actually go a little bit higher, hopefully into the 129 levels before it unravels below the 126.20 over time. And Aussie seems to be possibly resuming its downtrend. We can see that the market has actually topped up at just under 0.69, and at most we can see possibly a three-way rebound back into this bracket of prices at around 0.66 to 0.6640 for the extended run below 0.65, aiming for 0.64 over time. Dollar yen is going to be a dilemma for me because I was expecting dollar yen to actually come off big time, but so far we can see the rebound in the dollar yen from the from the Monday low at 140.150 all the way up to 143. So this was quite a big move, but again, this is a bracket of prices that again put us back into the same situation as we did last week, where the market actually hit 143.90 levels. So again, this level is going to be an area of interest to me, 143.40 to 145 even. I think if this market can actually hold and not break 145, I think the market may actually have a chance to come back down below 137, perhaps even as low as 134. Over in the dollar Canadian, we can see the strength in the dollar is very prominent in this currency pair here. For some reason, the dollar Canadian actually managed to register a new high for overnight at 130, just under 134, and this morning we can still see the prices are still hovering just under this level. Whether it will unravel, which is my preferred count, we will have to see, but so far there is no evidence it's going to come off yet. Okay, but it does give us the idea that over time hopefully the dollar may actually come off against the Canadian dollar. Okay, but of course this will be in contrast to my dollar strength scenario going forward. So something has to be resolved. Either the dollar CAC continue to rally higher, debunking my idea that we probably will see a dip to test the 131 levels in the dollar CAC, or the dollar is going to continue to strengthen over time in line with my dollar strength scenario. Now, over in energy prices, we can see crude oil prices are still very elevated. The high traded at $83.30 in the futures contract in WTI remains a price to beat, and I have mentioned the last pivot high at $83.34 was last traded on April the 12th, and if this level is taken out, I want to see whether the market have a adverse reaction here, meaning to say that after it breach, I will love, or rather I suspect that there's going to be a reversal somewhere around here. So I'm always on the lookout for a reversal, but I'm not going to sell this. I rather will stay long, because I believe that the energy market is definitely right now looking a little bit more bullish than ever. So selling against this sentiment is definitely not the right call. I will rather allow the market to drift a bit lower if it ever drift, and hopefully it can come back to test the $74 per barrel levels before I go long. Okay, and over in the precious metals, we can see that gold is holding water. We can see last week we can see a low of $1,924.90 in the spot market. Hopefully this market can actually hold within this bracket of prices and not take out the 1,925 levels again before it rally. Now I'm going to lower down my expectation for a while. Right now the market looks a bit tentative. If the market do rally, maybe my first target will still be gunning for this high here, which we saw on July 20th at $1,987.40. Okay, in the silver market, silver is a little bit weaker right now. The market actually went lower, much lower than what we saw in gold compared on a week-on-week basis. Now this is a 7-week low in silver at $23.06. Market is only slightly better as we are speaking right now at $23.16, and this has definitely overshot my target range of $23.33 to $23.60. So let's see whether it can actually hold. I'm still hopeful that the market can actually rally back to $25.27 at the minimum. Okay, in Bitcoin, I think the market is getting ready to go higher. The key level here will be 30,122. So we can see that the price has actually managed to hold up very well within this bracket of prices between 29,000 to 29,200 odd levels. And if the high managed to be breached and price actually managed to stay above the 30,122, I think it is basically telling us it is definitely about to take off, and the first target obviously will be 31,900 levels. Okay, so this is all I have for you for today. In the meantime, you take care, and I'll come back to you tomorrow with another update. Bye bye, take care.